Hey, it's Richard with Matthews Wealth Management here at my church, of all places. I think this needs to be talked about. Let me start very clearly by saying I am not a tax advisor. Go talk to one. All right, but with that said, let's talk about a qualified charitable distribution. And so, since I'm in church and since I came up with this to talk to our pastors at church about, good stewardship. Does Caesar even ask? Because, give unto Caesar. But is he asking for it? So let's go through how this works and then what we can do about it. This should be really simple stuff. All right. So assume you're retired. If you're not retired, just imagine when you are. But if you are, when you are, you got Social Security. You've got IRAs, and maybe you got a pension. That's very few of you. Not many people have a pension, but assume you do. And when I put RMDs up there, just if you're not familiar, it's an acronym for Required Minimum Distribution. And what that means is that once you reach 73 now, used to be 70 and a half, you're forced to take money out of your IRA, even if you don't need it, because, well, we got to tax you. And when we tax you on that, maybe more of your Social Security is going to get taxable. And maybe with all that extra tax, you're going to jump into another bracket. So it's a really cool domino effect of taxation that they put on the books a while back. And most people don't figure that out until they're like 70. And guess what? It's too late. You can't really do anything about it. If you're before 70, if you're the magical age of 59 and a half, and you're like, what is this RMD thing? I can help you. You should come see me. But if you're beyond that part and you're actually taking your required minimum distributions from your IRAs, this video is for you. All right, so all this income comes into the checking account. Some nice clip art, right? I love clip art. I hate PowerPoint though. All right, now with that checking account, what happens? Well, you gotta pay for stuff. You got your bills, you got your church or charity, and then you've got your extra savings. And that extra savings is actually a weird part of RMDs when we're doing, let's assume you got to take a chunk of money out and you're like, well, I don't want to spend it. All right, well, what do you do with it? Well, you put it back into a brokerage account or a CD or a savings account or whatever you do with it. And then when it grows, you pay capital gains tax and interest income tax and dividends. And so you keep getting taxed. That's the whole point. Pay the tax now, and if you save it, we're going to charge you tax again. So yeah, savings is a piece of people who have to take an RMD and don't necessarily need to spend it. A lot of people live within their RMD needs, which is good. That's a healthy balance. But for a lot of my clients, that's not the case. They're like, well, I don't want this money, so we'll put it in savings or give it to church, right? So let's talk about how that goes. And that's the whole point of this. So if you get your RMD or any IRA distribution, it goes to the IRS. You take out a chunk of income tax. That's called withholding, right? So we do federal and state withholding. And I mean, I could have put South Carolina Department of Revenue or whatever, but you get it. Income tax, right? So it's got to pay that tax. Then it comes down to the checking account. Then it goes to the church or the charity, right? Cool. No, not cool at all. That's the whole point. What if we don't have to do that? Well, what do you mean? Well, there's this thing called a qualified charitable distribution, or a QCD. We love acronyms in finance. You have the RMDs from an IRA. You got to pay to the IRS unless you do a QCD. It's what we do, I guess. And job security, because I know the acronyms, whatever. But it takes directly from the IRA, doesn't ever touch your checking account, and just goes straight to the church or the charity. And it's not taxable. And it satisfies the RMD. Everybody should do this. The reason that we don't is because nobody talks about it. So I'm talking about it. So let's give an example. Let's say your RMD, this is about a $500,000 IRA, right? And so roughly 4%, this person's maybe 75 years old, 76, depends. You got an RMD of 20 grand that you've got to take out, right? So at that point, I figure just based on averages with my clients, you're in the 22% tax bracket. So when this 20 grand comes out, 4,400 goes to federal income tax. We also have state in there. So I'm just going to ignore state for now. So out of your 20 grand, 15,600 went to church. 4,400 went to Caesar or the IRS. Or you can do a QCD where 20,000 goes to the church. 0 goes to the IRS. I mean, I don't know how much simpler I can be. I'm trying to think. I've put some thought into how can I make this simple, and this is as much as I can do, guys. And so, let's see. I'm going to address that in a little question thing before I answer these questions. Oh, that 20 grand. Let's say you need 10 grand of it to meet your monthly bills and expenses, right? Like if that's the case, great. Well, whatever you're going to give the church in tithes or offering for the year, don't do it from your checking account. That's it. You still need to take money from the IRA, that's fine or whatever, to live on and bring that into your checking account. But anything that is excess RMD or that you're already giving charitably, do it straight with the QCD. Okay, so now, how do I actually get this done? Do I go and say to my financial professional, I would like to do a QCD? Yeah, that's it. He should have already said it, or she should have already said it. So if you have to have this conversation, I mean, really? You have other questions to ask while you're there. All right, how many and how often can I do a QCD? As much as you want, as often as you want, as many as you want. Like if you've got a church and you've got, St. Jude and cancer, and you have your reason to give to all these things, cool, do it. You don't have to do it like one indirect rollover, right? Like per year. Like IRS sometimes does have frequency things. They don't for this. So I have clients will do like 8 a year. Okay. He comes up, I want to do 5 grand over here. I want to do 2 grand over here. Okay. Here's a form. Oh, here's a form. This isn't hard. All right. What are the limits? I'm glad you asked. 105,000 per person, 210,000 per couple per year is what you can give away. And that satisfies the RMD, and it's not taxable to your income either. So you stay in a super low tax bracket. Less of your Social Security counts as income to be taxed. And then lastly, what other strategies should I consider? Well, ask your financial professional. But there are other things like highly appreciated stock gifting. There's some estate planning stuff you can do with CRUTs and CRATs. And anyway, I'm not here to be your financial advisor, unless I am, in which case we've already talked about this. This is just kind of the end point. But do QCDs because you don't have to pay that income tax. And in fact, maybe this sounds really bad being in church saying this, but you're giving away church money to the government. And I don't think that anybody would agree with that. That's a good move. The government is not as value conscious in terms of, human well-being. Yeah, this is weird trying to put words to it, but don't cheat your church. Do QCDs. See you next time.